Hi friends, this is Ruhi Alikhan, and today I want to share with you something very big that's happening in California in the insurance industry. We've talked about this before. It's not the first time I am bringing it up, but I want to sound the alarm bells. And if I sound alarm bells, you better believe something alarming is happening. There are 3 insurance companies that our state is allowing to leave, and I guess the state doesn't really have control whether they're here or not. But we've got Farmers, Allstate, and State Farm. All 3 insurance companies are cutting policies and trying to bail out of California. Why? Well, it's because they've been hemorrhaging money with wildfires and natural disasters. But here is the scary thing. I've had a lot of my buyers who have tried to get home insurance recent months, and they have found out that their insurance, which, as you know, if you take a loan out, they're going to factor in your insurance costs. And when they factor in your insurance costs, they are going to look at your DTI, which is your debt to income ratio. And if insurance costs are skyrocketing because most of these insurance companies are leaving California, guess what? Insurance companies that are staying in California or that are being selective in the policies that they issue are doing something very sneaky. They are raising rates like you cannot believe. And I'm putting this out there because I want my clients and anyone who follows me, watches any sort of social media to really start paying attention, because I don't want you to get blindsided. I just recently called my insurance company to find out what my premium was going to go to so I don't get blindsided. And you're going to be shocked. I found out that 2 years ago, I was paying $3,000 a year for insurance, and the following year I knew it was going to go up because we had wildfires, and it went to $4,000. This year, when I called my insurance company to find out what my premium was going to be, she told me it was going to be $20,000. $20,000? Who can afford to pay $20,000 a year for home insurance? Mine is just a small example, and here's what I'm being told. 1, prices are going up because of all the wildfires in the area and the cost of inflation and the cost of construction and the materials in order to rebuild properties. And then it's just natural disasters. Essentially, what I was told was, of course, Rui, we've been paying out all sorts of money, and now we're just charging more so that when the next disaster happens, we are prepared and we don't go bankrupt. Okay, that makes sense, but why do I or you have to pay for this? And why does California not have any new legislation that prevents insurance companies from doing this? That is a 400% increase since last year. Is that legal? I don't think it is. I'm putting this out there for my buyers and my clients who are looking at purchasing any properties, whether it's an investment property or you're buying your primary residence. The first thing we are going to do when we're shopping for homes is we're going to start shopping for insurance. And I'm hoping a lot of my colleagues follow suit and do the same, because if all of these insurance companies leave California, guess what happens? Is the state going to start issuing insurance? I mean, yes, the state does, issue insurance right now, but I can tell you it's very nominal as far as the coverage, and it's still very, very hefty. I hope this helps. I hope you are paying attention to what you're paying in insurance, and I really, really implore you to call your insurance company to find out what your home insurance premium is right now. And I would love to hear your comments and feedback. That's it for now. I hope this helps. Talk to you soon. Bye.